right, so before bouncing off session lows this morning, Bitcoin was pacing for its worst month since the crypto collapse of 2022. More than $2 billion in leveraged crypto bets were wiped out in the past 24 hours, and the big institutional buyers, at least so far, have not been stepping in. U.S. spot Bitcoin ETFs saw their second worst day of outflows since launching nearly 2 years ago. And this isn't just a knock-on effect from macro headwinds and concerns that we won't get a Fed rate cut next month. The sell-off actually traces back to a flash crash in early October on U.S.-China trade tensions. That was triggered when a major stablecoin lost its dollar peg, sparking a $19 billion liquidation cascade that broke the crypto market's core plumbing. Those key market makers who act like the central banks of crypto never fully recovered. They have been pulling back, shrinking balance sheets, and that has made liquidity razor thin. Even modest selling can now move the market in a big way. Open interest in perpetual futures, a key gauge of leverage, has dropped 35% since October. And that signals traders are either too spooked to re-engage or simply tapped out. And you've seen that sell-off spread to the digital asset treasury names like Strategy and Tom Lee's Bitmine Immersion, both sharply lower as hedge funds use them as proxy hedges. UBS, in a note this morning, warning that Bitcoin's collapse in spending power amounts to the equivalent of 800% annualized inflation. And of course, the last time we saw a cascade like this was 2022, and that ended with the collapse of FTX.